on a quarter century of excellence.
So let's get going and start talking about the Asian markets. They are largely lower in trade.
Companies announced that the global company has decided to terminate this MOU, and therefore these two companies will not enter into a master services agreement.
Support for the Bank Nifty comes in at the 20-day moving average, which is 46,589.
And this comes in after a buyback that they'd announced back in March 2022.
And this comes in the light of this mega media merger that took place between Network 18 and TV18 itself.
The Nifty has opened up 17 points higher.
If you look at 2023, clearly it has panned out much better than what most people anticipated.
Bhavish Agarwal, the promoter of Ola Electric, is looking to sell around 4.7 crore shares, while OFS.
In terms of our growth perspective, we're expecting to launch 3 new projects up to March.
In the past 3 years, we have grown at a 36% CAGR.
The Indian Navy also carried out a preliminary assessment of the attack on MV Chem Pluto.
For the markets, it is another Santa Claus rally that we are seeing today. There has been a substantial recovery from the lows.
Well, that was a wrap the day so far, and indeed, as Sonal was saying there, the Santa Claus rally continues. You're with us here in the last hour of trade. This is Closing Bell. We're coming to you as always from the CNBC-TV18 Motira studios. I'm Prashant. With me, my colleagues Reema and Surabhi. Guys, hi, afternoon.
Hi, it's looking good, right?
Not bad at all.
Yeah, the screen, however you look at it.
I mean, but the only thing is that we, when we got off air after Bazaar, we ended with we wrapped up the show with a 100-point gain on the Nifty. We are up 100 points.
So you want more? You dil mangi more. Prashant, is that what you're saying?
Absolutely fine with 100 points. But, yeah, so it's been quiet, right? I mean, most of the action happened right in the first 1.5 odd hours or so. And since then, until about 10:30 or so, there's not been very much volatility or anything of that sort. It's been steady. The intraday perhaps will show you that. There you go. On the index. Now, just a few things on levels, etc., that I want to put out. So the Nifty is now, unlike, by the way, the Bank Nifty crossed the 78.6% retracement on Friday and then closed under it. Nifty did not. Nifty is now trading above the 78.6% for itself. This retracement is nothing but the Wednesday high to the Thursday low. So that essentially just a one-day fall, because Thursday the market bounced from the day's lowest point. So that number is 21,461, and we are now where? We are just under it now, 454. So 10 minutes back we were above it. We'll see. All-time high, of course, is the next natural kind of, put levels and levels to take out. That would be 21,593, 21,600 roughly, which is the previous high. For the Nifty Bank, the corresponding level to take out, which is the 78.6, is 47,900, and we're very close to it, about 120 points in the Nifty Bank. So it just needs a little bit of a push. But close will be important, not what the market does intraday when you look at technicals. Public sector is still the clear leader, so the gains there continue. And if you just sort what's happening across indices, in terms of gains, and the CPSE index is up nearly 2% here. Mid caps are doing well, small caps are generally taking a bit of a break. So that's the overall picture as we begin the last hour here this Tuesday. Reema.
Well, it's all about PSUs, right? Look at Mazgaon Docks. Look at BEL. Now, BEL had given a guidance of 20,000 crore of order inflows in FY24. Already, the company's achieved order inflows of 26,000 crore rupees, and analysts are saying by the time they close the year, their order inflows could be close to about 30,000 crore rupees, and that's what's gotten the street excited. CLSA raising the target price there. Mazgaon Docks is another one. NLC, oil marketing companies like IOC, HPCL seeing some solid buying. And another pocket of strength today are chemical names. So Tata Chemicals tops the chart, very strong volumes, but even a Deepak Nitrite, Aarti Industries are up nearly 4 to 5%.
And then you have today's listings, right? Interesting mixed slate for a lot of the new entrants on the street today. I'm just pulling up the new ones. Muthoot Micro has been subdued, down about 8%. Suraj Estate is the other one, down about 6%. And then there's the jewelry company, Moti Sons. That's kind of blown away the rooftop, an 80% sort of an increase going on. J. Kumar Infra, by the way. Remember, we were talking about J. Kumar earlier on, positive brokerage commentary coming in. There's a 20% circuit on J. Kumar Infra. So, largely speaking, it's been a very active, mid-cap and small-cap day. Large caps have largely sort of coasted along, so to speak. So, not too bad. Some more gainers to speak of on the PSU side, REC, Aircon, NMDC, BHEL, SJVN, GAIL, ONGC, across market caps, PSUs really where all the action pretty much is. So the question is now, what next? Next to 1 hour of trade. So what are the positions in the trading the trading setup that one can look at? We have Mitesh joining in for exactly that. Mitesh, good afternoon. Good to have you back. So take us through, what can trades be now? Are you expecting any more headway on the indices of the Nifty or the Bank Nifty, or would you stick to stocks?
Good afternoon, Survi. My sense is that I think, the market's around 21,550, which was the hourly pivot last time when we were here, I think could still face some challenge. And since, the hourly and 2-hourly indicators are still not giving the signs of a breakout, I presume that we might still do this range of 21,550 to about 21,200 or even 21,000 in case of some negative news flow. So I still believe that this will be a part of consolidation. This is not starting a new move. But yet we have been trading with long bias purely because of the fact that the overall directional bias remains on the upside. The medium and the short-term charts are positively biased. So which means that in case you're trading long on the stocks and avoiding the index, you still should be doing pretty okay. So I think that's the approach which we have taken. Once we start getting past or getting signals of index getting past 21,550, then I think you would want to go long or wait for that decline pullback to happen below 21,200 is where I would want to explore more long positions. On the stock side, recommend a buy on BPCL with a stop at about 444 and a target of 470 on the upside to begin with. And the other one which I like is Chambal Fertilizers, buy here with a stop at 360 for targets of 380.
Okay, thank you very much for that. Let's get you an exclusive now. We learned from sources that Bajaj Finance, RBL Bank's co-branded credit cards get a 1-year extension from RBI. Vivek joins us for more on the news and the implications of this development. Vivek.
Well, absolutely. Like you mentioned, the co-branded credit card issuance tie-up that Bajaj Finance has with RBL Bank, this particular, business line that both of these banks have, actually, they had announced it for a period of 5 years, where on every 2 years, they have to get approval from RBI to go ahead and restart the entire process or to go ahead and continue the business as is. Now, what we understand from our sources, this is an RBI letter that has been written to Bajaj Finance. This letter was written when Bajaj Finance on October 27th requested the RBI for an extension of the continuation of the business. Now, the RBI, in fact, has given only a 1-year extension against, what Bajaj Finance had asked. The ask was much higher. Along with that, remember, the co-branded card business of Bajaj Finance with RBL accounts for almost 60 to 65% of RBL Bank's total credit card issuances. Now, this is as per a Motilal Oswal security report. So, it's an important business segment as far as RBL Bank is concerned. Now, however, when you're talking about what RBI had to say to Bajaj Finance in the letter, they've mentioned and they've used quite a bit of strong commentary in terms of how exactly they're viewing Bajaj Finance. They've said there have been serious deficiencies that have been observed in the company's adherence to RBI guidelines. Along with that, the RBI says we have taken a decision to renew permission only up to 1 year, that is December 21st, 2024. And any further extension is subject to further review from the RBI. Remember, just a month ago, Bajaj Finance had informed the exchanges that it temporarily plans to halt issuances of EMI cards to new customers. We reached out to RBL Bank, we reached out to Bajaj Finance as well as the RBI. RBI and Bajaj Finance are yet to respond to our queries. RBL Bank told us that, RBL Bank and Bajaj Finance have a long-standing co-brand partnership agreement, which was renewed in December 2021 for 5 years. We continue to issue the co-branded cards in line with RBI guidelines. So slightly concerning development for both Bajaj Finance as well as RBL Bank.
Vivek, do we know what are these serious these issues, anything specific there with regards to any norms which have been not adhered to, etc. And also, since it's a co-branded card, the issue is with RBL or is it with Bajaj Finance? Who is RBI unhappy with?
So, the letter that we accessed is the letter that has been a response to what RBI has sent to Bajaj Finance. So, the letter is issued to Bajaj Finance, and Bajaj Finance had, on October 27th, asked, the RBI for an extension. So at this point of time, it appears as though, most of the disgruntlement stems from Bajaj Finance business practices. And in fact, like we said, the language, while RBI has not mentioned any specific guidelines, in this particular letter itself, but they have said that, serious deficiencies have been observed in companies' adherence to RBI guidelines. And they mentioned, this a couple of times, and they've in fact said that further action may be taken, on further review. So at this point of time, the worry mainly stems from Bajaj Finance practices, but RBL Bank, is impacted because a major portion of the credit card business does come in from, the new cards that are issued from Bajaj Finance, which is well in excess of 50% of the new card issuances that RBL gets in.
Fair enough. Just throwing this question at you in case you know, Vivek. So you've told us the impact on RBL Bank. More than 50% of the credit card issued are via this co-branded route with Bajaj Finance. What could be the potential impact on Bajaj Finance, in case you do know this? Or what percentage of your portfolio?
Well, what we do understand is that, NBFCs aren't allowed to go ahead and issue credit cards on their own. So this particular route that, Bajaj Finance has taken is one of the main routes in order to go ahead and get an entry or get a foothold as far as the credit card business is concerned. In the larger piece of the pie, probably not as significant for Bajaj Finance as it is for RBL Bank. But remember, this comes on the heel of the RBI directive already just a month ago that forced Bajaj Finance to stop the EMI card issuances. So two back-to-back, RBI directives that have gone ahead and, cracked the whip on the business practices is something that, the street doesn't really like.
Thank you very much for that. In fact, Bajaj Finance was under pressure even on Thursday and Friday. On Wednesday, the entire market sold off, and Bajaj Finance was no exception. But on Thursday and Friday, when the rest of the markets recovered, you had Bajaj Finance losing ground. There you have it. Since Wednesday, we've seen quite a fall in the stock. Dipan, I think you've been along, Bajaj Finance has been one of your favorites, right? For a while. Am I getting it right or wrong? Before
yes, absolutely.
Okay.
Absolutely. It's one of our
so how would you view one of your top holdings? So would you be concerned about these recent developments? Is RBI cracking the regulatory whip on NBFCs in general, and now this development with RBL Bank?
Yeah, well, I think, yes, these are issues which come along the way. And I think this is the new regulatory environment which one has to deal with. But I think so far, whatever communication has come from the company, it remains positive, and they continue to guide for that 25% thereabout growth in top line, bottom line, all other financial parameters. And with the underperformance which has taken place, obviously the valuations also have come into that reasonable zone. And I do feel that from this point on, we will have large cap stocks, index stocks doing far better than mid cap stocks. So from that point of view also, tactically, I think stocks like Bajaj Finance, HDFC Bank, Kotak Bank should do far better and start to outperform. It's been a laggard for the last, I think, couple of years or so, and I expect this trend to get reversed once the quarterly numbers for December are announced. And hopefully there is no negative commentary on these two counts from the management.
Okay, let's wait by and see if there's any clarity, if there's any statement that Bajaj Finance would issue on this matter. And there's some pressure on the stock today, for sure. Deepan, stay on. We'll have some more questions for you. This is the latest on IPO Street, and it's a high-profile issue that's about to hit the market. Ola Electric has filed its DRHP, and it is targeting hitting the primary markets, and it'll be the first IPO by an auto company in the last 20 years. And the company is looking at raising a little over 5,500 crore rupees via this issue. Parikshit has more details on this. Parikshit, do tell us more about the financials and how Ola Electric is looking at its expansion through this fundraising.
Well, the total offer for sale is of 9.52 crore shares, out of which the promoter, Bhavish Aggarwal, is selling 4.7 crore shares via this OFS. What we're learning is that out of 5,500 crores, 1,264 crores will be used for the Gigafactory, 800 crores will be used for debt repayment, 1,600 crores for R&D, and 350 crore for organic growth initiatives as well. The total liabilities of the company as of June 2023 are 3,600 crores versus 3,217 crores as of FY23 end. The loss for quarter one of FY24 was at 267 crores. For FY23, the loss came in at 1,472 crores versus 78 crore in the FY22. The company has also pointed out in the DRHP that it may continue incurring operating losses in the near term. At the same time, they hope to sell around 3 lakh electric two-wheelers in FY24, around 9 lakh electric two-wheelers in FY25. When it comes to the path for profitability, this is what many investors are asking. Sources are telling us that the company is hoping to achieve EBITDA profitability of 6.6% by FY25. This is what sources are telling us. What is this entire capex and fundraise going to be used for? Well, the fundraise will be used for the Gigafactory, which will be used for supplying cells to Ola electric scooters, motorcycles, and possibly cars in this future. This Gigafactory will be up and running by March. They want to expand their two-wheeler portfolio. The S1X 2 kilowatt hour, the Ola S1X 3 kilowatt hour will be launched by H1 of FY25. Motorcycle deliveries are being targeted for H1 of FY26. So this is Ola Electric's launch plan overall. The company says that there are, of course, risks associated with the electric vehicle business, including suspension of FAME subsidies, which may impact the business altogether. But the path to profitability and how Ola will cut losses, its future product launch plans, these are something that the markets and investors will be watching out very closely.
Absolutely. That is something that the market will have a hawk eye on, that loss line and whether Ola can get those losses under control. Thank you very much, Parikshit, for the details over there.
You know, Surbhi, so that is Ola specific, right? But I think from a secondary listed perspective, one is that all these companies, Bajaj, Hero, everybody's going to, TVS, of course, is big in EVs as well.
Tata
so they
Motors,
have their,
for that matter.
Yeah. No, but in terms of two-wheelers, since we're talking about Ola right now, so how this translates maybe is that Ola essentially is asking for a $7 billion valuation, right, approximately. Now, and they have a 35% share, according to the last number that we have, by volume sold every year. 35% share in electric two-wheelers. So $7 billion for a 35% share. So the total market then becomes about $20 billion. Total 100%. The market is about...
Two-wheeler electric market.
Two-wheeler electric market is worth if you go without ifs and buts about what Ola is asking for, the total 100% of the two-wheeler electric market is worth $20 billion, right? These are, of course, I mean, based on of what Ola is saying. Now, take TVS as an example. TVS has a 20% market share. Ola is 35, TVS is 20. It's the number 2 position. So then, at 20%, if you consider the total market to be $20 billion, TVS's EV business should be worth $5 billion, right? And its market cap is $11 billion, total market cap. So you're basically saying that TVS's ICE business, the petrol sort of two-wheeler business, that is only worth about $6 billion or so. That is the kind of I think that's the reason why I think stocks are perhaps getting excited, because they perhaps then, I mean, if you go with these numbers, then perhaps
there's a case for re-rating some of the existing listed
and
players.
these are stronger companies, larger companies. I mean, they'll be able to press the pedal with, I mean, much greater resources, right? Because the existing business is throwing up a lot of cash, especially players like Bajaj, etc. So I think that's the rub-off effect of Ola. Again, not a comment on what Ola is, I mean, in terms of valuations, it's correct, not correct, but based on what they're asking, I think these could be the numbers.
Let's bring in Deepan in on this, and I'm glad you brought up this point as well, Prashant. Deepan, weigh in on it. I mean, the valuation, I know it's a little early, and we'll be doing a lot more math on the Ola Electric IPO as we go forward. But again, the asking number, about $7 billion, on a run rate where, I mean, the losses are still pretty substantial for the company. Go back to 2021 when a lot of the internet companies came to town, and the market had its own way of teaching the companies to look at profits very, very carefully. What do you think the case could be this time around with the EV maker?
You're right. I think the same thing will happen over here as well. And we certainly aren't really looking at applying for Ola Electric's IPO, having burnt our fingers with the likes of Nykaa, Paytm, and Zomato. Now, of course, Zomato has moved up. But it has had very challenges at some point of time. And this is typical of market euphoria, when you see loss-making companies like this trying to get listed because the IPO is really hot and strong at this point of time. On the whole, I think it's a good business, but from a secondary market investor's perception, expectation, I think it is a bit early. Secondary market investors typically want to see profitability, visibility of earnings, and overall, kind of a long-term growth plan, which may not be particularly available as far as Ola Electric is concerned. So I'd give this IPO a pass, but no doubt, because of the euphoria, you may get some listings, some gains on listing. But from a trading perspective, you can apply, but from a longer term investment, I'm not so sure that this is the right price point to enter Ola at this point of time when there's so much uncertainty around profits.
And to Prashant's point, Dipan, that maybe some excitement rubs off and maybe some valuation gains here for the other listed two-wheeler makers, which are also building up their EV portfolio. Would you play for that at all on a Hero or a Bajaj or a TVS for that matter?
No, I don't think so. I think by themselves, they are doing pretty okay. And after a very long time, we are seeing revival in two-wheeler sales. So that's great news from TVS and Hero MotoCorp from that point of view. So I think, you could have a kind of a positive sentimental effect, but nothing really changed on a fundamental basis for these companies. And the street will continue to value them on an overall basis based on price to earnings multiple, EV to EBITDA, and all such valuation ratios.
No, I completely agree, Deepan. The only point I was making is that Ola, if I had to put if I was breaking a newspaper headline, the Ola IPO, essentially existing two-wheeler makers look cheap based on what Ola is asking for its valuation. That's the point I was making. The existing,
Prashant, this is
business
for all IPOs. This is true for all IPOs. You see the IPO coming in a peer group company. The peer group company in the listed space is cheaper than the IPO price for almost everything, So,
Yeah, the other day somebody I was talking to was joking, saying that, I don't remember which company, said, well, they should probably delist and then list again. Because then it'll probably...
It's called a bull market, gentlemen. We're in the midst of a roaring bull market, I guess. That's what this conversation tells us. Let's take a very quick break. Have to take a quick break on that note. Back with more on the other side. Then Shoy Rani from Helios Mutual Fund will join in and give some thoughts on the market as well.
CNBC-TV18, embarking on a quarter-century of excellence. CNBC-TV18, embarking on a quarter-century of excellence.
Welcome back. Castrol has broken out. It's a 10% gain on Castrol. It's trading at the highest level that we've seen since December of 2014. And the stock is nowhere close to its all-time high level. The all-time high level is 272. But this is the best day for Castrol since March of 2020. That's what Hormuz tells us. And that stock is up 10.5% now. The other pocket of strength are the shipbuilding stocks. So Cochin Shipyard is 6.5% higher. This is a stock with a year-to-date rally of 160%. Mazgaon Docks, 8.5%. Year-to-date rally, 190%. And Garden Reach Shipyards, too, has gained 7% with a year-to-date rally of close to about 8%. The other pocket of strength today are the chemical stocks. Sonal gets us the latest from this space. Sona.
Thank you so much for that. Well, there's nothing fundamental which has changed in the chemical space right now, but do remember they did go through a rough patch. Quarter 1 and quarter 2 were really weak sessions for all these companies. So today there is some comeback that we're seeing for the likes of Balaji Mines, be it Alkyl Amines. These two stocks, despite the gains seen, are still in the red for the year so far. We have Tata Chemicals, which has made a move of around 7 to 8%. Deepak Nitrite is higher. We have Aarti Industries, Fine Organic, Vinity Organic, some of them in the commodity chemical space, which are making a comeback right now. So this is the buzzing space right now. But the other stock from the space which is in focus is Anupam Rasayan, because the company has filed an LOI of around $61 million, which is close to 500 crore rupees, with a leading Japanese chemical company to supply new age polymer intermediates for the next 9 years. The supplies will commence from calendar year 2024 itself. And with this new LOI, their total LOIs will be around 8,000 crore rupees, considering all the orders that they've won from Japanese companies in last 1.5 years. We spoke to the company earlier today. They said that they will be the only manufacturer of this particular polymer in India and one of the few globally as well. Polymer will be used in the aerospace industry, semiconductor process material. In last 1.5 years, they have signed 4 LOIs with Japanese companies, and Japan is looking like a very interesting market for them, something that we can see for other chemical companies as well. They say that demand from US is strong, but from Europe it continues to be weak. So it's a mixed signal for now as far as demand is concerned. So no direction, so to say, in terms of positive demand coming in from Anupam Rasayan as well. So this is something that we got from the conversation with the company.
Okay, thank you very much for that. Deepak, to weigh in?
No, see, I'm not very positive on all these specialty chemical companies. They are trading at rich multiples, and typically they are B2B businesses. And what we have seen last 3-4 quarters is that there are a lot of cycles within these businesses as well, which certainly doesn't justify these kind of valuations. We all heard about the China Plus One story, and these companies have also invested a lot in building their capacities. But these are long-term trends which take time to fructify on a company basis. But given the valuations, I'm not that optimistic on the sector as a whole. I'd like to avoid all companies, including the likes of Anupam Rasayan.
Okay. Let's talk about defense, right? I mean, Mazgaon and I think Bharat Dynamics and BEL. They sort of cooled their heels for a while for the last many months after having a non-stop move through 2022 and early 2023 as well. But CLSA has raised their price target on BEL. Upasana is here with that. Upasana.
Well, BEL is a stock that remains in focus today on the back of the order win that the company received last week. The company has received orders worth 2,600 crores around from Goa Shipyard and Garden Reach Shipbuilders and Engineers for the supply of 14 types of sensors for the use on next-generation offshore petrol vessels. With the above, the backed cumulative orders in the current financial year is around 25,935 crores till now. Well, CLSA has upgraded its target price from 157 to 207 with a buy rating on the back of this development. It says that the company is set to beat its FY24 order inflow guidance, with FY24 YTD orders surpassing 25,000 crore mark as the government brings forward Make in India orders ahead of a likely election-led lull which is seen from Q4 FY24. It also says that it is observing a rising share of electronics and defense equipment. With the latest sensor order that the BEL has received, it believes that the offshore petrol vessels account almost 28% of the overall OEM orders. It has also raised the EPS estimates by 5 to 7% for FY25 to FY26.
Okay, Upasana, thanks very much for that. That's BEL, stocks up about 4% or so. Dinshaw Irani is now joining us. He's CEO of Helios Mutual Fund. Dinshaw, good afternoon. Great to have you with us here. Season's greetings. I hope you're coming out of a nice, long, restful or not so restful weekend if you've been partying. But good to see you. And markets, I mean, they just took off. A 3-day break and let's move up another 100 points. Just like that. How are you feeling about the market as we wrap up this year now? Just a week to go, Dinshaw.
Thank you, Prashant. Thank you for having me on your show, and a very good afternoon to you, your team, and the viewers. So, Prashant, it wasn't it was a fairly hectic weekend. Let me tell you that way. But anyway,
without going into details.
I
know you like to shake a leg once in a while. So I know. Go on then,
But
go on.
anyway, so as I was saying about the markets, I think it's about time to. But the fact was that the biggest hurdle in the market was obviously the elections, the central one, which is supposed to come in May. But I think the state elections laid out a clear path of what's in store for us during the central elections. So I think that's one big hurdle out of the way. The second big hurdle was obviously the US and the interest rate scenario out there. The fact was that with the 10-year touching 5 and now coming off again very sharply, that's a big positive. And obviously the committee of the Fed, which again was fairly, not again, first time ever, it was very dovish in the sense that they're talking about 3 cuts going into next year. I mean, I think it'll start in the second half of next year. Our feel is they won't stop at 3. I think it'll be much higher than 3. But maybe the quantum will be less. So these are the few positives that one saw. And obviously the one negative for the world, which seems like a positive for India, is the way China has been going, right? All-time lows, and obviously things don't look that rosy out there. And mind you, China used to be a big competitor for us in terms of the capital flows into the region, which in a way is waning to an extent, and that's why I believe the money is flowing into India. So all in all, looks like a pretty good scenario, at least for the large cap part of the portfolio, because small and mid, they've run up very sharply. I mean, 40% plus year-to-date kind of run-ups, not easily digestible. I think there may be a time correction there, but we'd rather stick to large caps.
Dinshaw, hi. Good afternoon, seasons. Greetings. You've led me to my next question. I was going to ask you a fun question, basically. So if someone's getting a big fat bonus as the year is, getting over, that's not me. I'm just saying anyone, someone. Should they be putting that money in a large cap fund, or stick to a small cap or a mid cap, or I don't know, flexi cap? Where's the money to be made? If you want to cut one check to a fund house, what kind of a fund should it go in? Banking, maybe? I don't know. A banking fund, which has been an underperformer?
Sorry, I forgot to greet you all, season's greetings when I started off, but thank you for reminding me. But anyway, I think it should be a flexi cap, and especially since we have only one flexi cap in our fund house. So that's what I'm saying. But more seriously, I think the fact is that it should, obviously, I mean, when you're talking about large caps, it shouldn't be purely a large cap, because you have to have some kind of a leeway as and when. So as I said, that our feel is that there's a time correction to be had in mid and small cap part of the market, because basically I don't think there are any negatives apart from the valuations. Valuations are stretched, but as we all know, valuations can be unreasonably high for a very long time. So the fact is that you need some negative trigger, which doesn't seem to be the case in that part of the portfolio. So maybe the large caps will rally up to catch up with the mid and small in terms of valuations as such, and from there probably we take it up again another day as and when the results come out, we'll be able to analyze. So I think a flexi cap would be the ideal way to go, because you need to have that openness to even shift the weights as and when you feel that there's a small cap, mid cap rally about to happen.
Dinshaw, afternoon, Rima here. What will be the big theme of 2024? Globally in 2023, all questions were centered around, will the relentless rate hikes by the Federal Reserve crater the US economy? That didn't happen. But what, according to you, will be the big macro theme that will shape 2024?
I think definitely the price cuts the interest cuts going forward as such, because that's one thing that has been awaited for a very long time. In fact, December 21 is when they started hiking rates as such, and it's been like 2 years and some months going forward as such. At least they've abated the interest rate hike. So I think it'll be the cuts happening. And mind you, whenever the cuts happen, it's mainly the asset book doesn't adjust so easily. It's a liability side of the book which adjusts. So you may see some healthy growth in NIMs going forward for a smaller extent as such. But the fact is that the asset growth also will kick in. So I think financials is a big theme that one has to play out. In fact, we are totally overweight in financials. I mean, all across, be it banks or NBFCs or even in the insurance space.
No, got that. So, I just want to ask you about one particular segment, which is real estate. Dinshaw. We put out a piece a few days back in terms of how the index itself is now, the Nifty Real Estate Index is at a new high, but stocks, lots of stocks are not. They're still pretty far away from their respective peaks. What's the best way to get some exposure here if one doesn't already have exposure? Actually, institutional exposure in this space is not that large, right?
Right. Agree, Prashant. But the fact is that they're very, I'll talk about myself, ourselves. In fact, the fact is that we are very concerned about the way that businesses run also, right? So there are quite a few gray areas out there which you need to avoid. So you need to be in a stock which is mainly in a metro-centric market, because we are looking at only luxury selling right now. Luxury as in higher ticket items selling right now. So you need to be in a metro-centric play. You need to be in a play which is not only into residential, but also into, say, commercial and retail, and obviously has a good leasing portfolio going forward. So these are the kind of mixes you need to look out for, and it shouldn't be debt heavy, because that's one thing that can, if the cycle turns, that can drag you down as such. So, and fairly limited amount of plays in that kind of a mix. So that's why we've got only one player with us, and I think we're quite happy with that story.
DLF, right? I mean, in that sense, which fits the bill.
Yeah, it's there in my portfolio. I mean, you can look at a mutual fund and you can see that. Yeah, that's about.
Yeah.
Dinshaw, just a word on the primary market. Does that worry you at all? Primary market or any other space where you think there's a bit of froth, where one needs to exercise caution now?
No, actually, it's a really good question, because primary seems to be, so basically, I mean, whenever these kind of frothiness happens in the primary market, it's time to be cautious, because your retail guys are getting stuck there. And frankly, I mean, what do you say, with valuations of 50, 60 times for an engineering company and for a diamond retailer and stuff like that. I mean, come on, you have better players in the listed space as such. The fact is that there's a dearth of ideas, and that's why people are jumping onto that. But I would rather be very careful in that space, and I'll be very cautious. In fact, we've not participated in any of the IPOs of late as such. So.
Dinshaw, great conversation. Thank you for joining and for all the wonderful conversations of 2023. Happy New Year in advance, and we'll chat in the next year. We'll slip into a very short break. On the other side, we'll get you a check on dealing room, what dealing rooms are saying in our segment D Street Chatter. We'll also get you a few BTST calls from our technical experts.
CNBC-TV18, embarking on a quarter-century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. So the market's retaining most of its gain, 80 points up on the Nifty. It's just the Bajaj twins, Finance and Finserv, that are feeling the heat, both down nearly 2%. Let's straight away go across to Nimesh and figure out what the chatter has been like in dealing rooms today. Nimesh, so I don't know, maybe thinner attendance as we're getting to the last few days of the year. What have you picked up?
Hi, Surbhi. So, of course, you're going to see thin attendance as we move towards the year end. Again, and that's showing up in the cash volumes as well. So, while the markets are at days high, the cash volumes are on the lower side, and the volumes and the rollovers have picked up because ahead of the expiry this week. So, that's the general flow from a flow perspective. I guess the sector of it is clearly the chemical stocks. The entire basket is buzzing in trade, whether it is cash stocks led by Tata Chemicals, or for that matter, even the future stocks. So, chemical as a space is done well. Looks like more of a sector rotation within the sectors as well. But the consistent performer is the PSU names. Again in today's trade, big moves in the PSU stocks, whether it's OMCs, whether it's the defense PSUs, all are buzzing and well bid as well, is what I understand from larger institutions. Even the broader market has done well today. The index is up more than 0.5%, but there are a lot of individual names which are doing good and are well bid as well. So the action continues in the broader markets, but I guess today the sector of it is clearly the chemical names.
Okay. Specific stocks, anything in chemicals or beyond? What are you looking at?
Well, in terms of individual stocks, first I've classified the two large block deals for today's trade. So the first one is Solar Active Pharma, a large block, nearly 5.5% equity got change, and then after that the stock is up 11% in today's trade. So the disclosures could be quite interesting there. I understand it's a clean out trade, so look out for the seller as well as the buyer's name. Could be some interesting names on the buy side as well. So maybe that explains the big move in that stock today. And the second name was Arman Financials. The company last week did a QIP as well, and today there is a large block, more than 4% equity got change hands there as well. I understand the venture capitalist fund, which owns close to 21%, they were selling in today's block. So even there, the buy side disclosures could be quite interesting to track. The second name is Castrol. This is an interesting name. After a long time, some bit of buying traction seems to be back in Castrol as well. Entire last week there was a large delivery volumes as well. Even in today's trade, it's backed by large delivery volumes, and the stock is up 10%. And I understand an influential HNI investor is an active buyer in Castrol of late. So that's the second name. The third is Laurus Labs. Within the pharma names, this is one stock which has quietly moved higher in this month. The stock is up 13% this month and on good volumes as well. The street is anticipating some sort of a corporate development as well as winning a large order as well in the CDMO space. So that's keeping Laurus Labs exciting of late. And the last one is Arvind Limited. For the third day running, the feedback is there are strong buy flows at FID. So expect high delivery volumes in Arvind Limited even in today's trade.
Thank you very much for that. The news is out on Adani Green, where the board or the company will be issuing 6.3 crore convertible warrants to the promoters. There was a board meet today to consider fundraise, and the details are out. The price is set at 1,480 rupees per warrant. If you pull up a one-year chart of Adani Green, in fact, for the entire Adani Group, it's been a tale of two halves. Before the Hindenburg research report came out, Adani Green was trading at a price of 2,100. The 52-week high this year was 2,180. After that came the crash. The stock fell to levels of 439. And then once the GQG investment came in towards the end of the year, you've seen the stock price recover quite a bit. 439 was the 52-week low, and the stock is now at 1,576. And now there is some promoter infusion at a price of 1,480 rupees per warrant. That's Adani Green for you. The stock has spiked post this announcement. Let's get to Mitesh Thakkar for a few BTST calls now. Mitesh?
Yeah. I have a BTST and Colgate Palmolive. I think that's headed towards the high of the day after a few days of sideways activity. So take a BTST here with a stop below 2440 for targets of 2480. And Bajaj Finance, I think just mentioning that still looking negative, so we'll take a STBT call over there. Take a stop at about levels of 7,200. Look for targets of around 7,100.
Thank you very much for that. STBT on Bajaj Finance. Let's move on. We learn from sources that life insurers are seeking more time to submit a response to the proposed higher surrender value for life insurance policy. Yash has been on top of that story, getting us all the exclusive details. He joins us for an update. Yash.
Well, Rima, it was just last week when these life insurance companies had to face the rude shock from the regulator in the form of that consultation paper suggesting higher surrender value to policyholders. It was a significant difference from what they pay currently. Now, what we've been given to understand is that, of course, life insurance companies very recently met amongst themselves under the banner of LI Council. We had reported the discussions, concerns, and the suggestions which were discussed in that meeting. There have been more action to that. What we've been given to understand from our sources is that certain life insurance companies have written directly to the IRDAI chairperson, Debashish Panda, seeking an appointment, a meeting with the chairperson to discuss their concerns related to this particular consultation paper. Also, what we've been given to understand is that these life insurance companies have sought an extension to the deadline when it comes to submitting their views on this particular consultation paper. IRDAI has suggested a deadline of Jan 3rd. The life insurance companies have sought time till January 31st when it comes to submitting their suggestions, those crucial suggestions on the consultation paper. Another important thing is that these life insurance companies were of the view that for the calculation of this higher surrender value, the threshold should be a percentage of the total premium which the policyholder pays. What we've been given to understand from our sources is that the regulator, that is IRDAI, is not in the favor of giving a percentage as far as that particular threshold is concerned. Rather, the IRDAI thinks that this threshold should be equivalent to the fixed expenses which life insurance companies make on any policy, and add to that some bit of nominal charges which they can take out of these surrenders as far as the life insurance policies are concerned.
Okay, all right, got that. Thanks for explaining the details there, Yash. So life insurers in focus. Let's move on to one more stock, Inox Wind. Inox Wind is up about 3.5% right now as we speak. The wind energy solutions provider has won a repeat order for 279 megawatts for its 3-megawatt wind turbine generator from a large commercial and industrial player. To talk about this development, we caught up with Devansh Jain, Executive Director at Inox GFL Group, and he gave us a lot of details about the nature of this order, the fact that the revenue recognition is close to 2,200 crores, and that is without accounting for the operation and maintenance part of the order. Take a look at all the details here.
What we've announced today is a 280-odd megawatt order. It's a 180 megawatt pure play equipment supply with very limited scope, turnkey, services, as well as a 99 megawatt turnkey order. The thumb rule order value ranges between 7.7 crores to about 8 crores per megawatt for a turnkey order. So in order of magnitude, this would be an order win in excess of 2,200 crores. In terms of order book, I think we were at about 1,276 megawatts as of 30th September. And I think with this order, our order book exceeds 1,550 megawatts.
Okay, we'll take a quick break on that note. Come back on the other side. Jay Bala from Cash the Chaos will join in. We'll get some technical perspective on the market.
CNBC-TV18, embarking on a quarter-century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Mac here with us on Closing Bell, and that's the picture. Pretty steady gains for most part of it. That's how the day seems all set to close. We've got some more stocks on the radar. Embassy REIT is actually one such script that's on the radar right now. We have Vivek joining in with the latest. Vivek, what's the buzz here? I mean, are we looking at some sort of a weight increase on the back of any index change?
Well, absolutely right. So if you recall, on December 20th, Blackstone had sold their entire 23.6% stake in the company and had completely exited their investment as far as Embassy REIT was concerned. On the back of that, the free float in the stock increased quite considerably. And remember, this particular stock is part of the FTSE All World as well as the all cap indices. On the back of that, this particular weight increase was necessitated by the exchanges. And today's trading session, like you mentioned in the last hour of trade, we are actually seeing inflows of close to $25 million in the session today. So in the last hour, the stock is piped up on good volumes as well. So $25 million, a weight increase in the FTSE indices on the back of increased free float due to the block deal that happened, where you actually saw Blackstone go ahead and exit its entire stake in the stock.
Thank you very much for that. Jay Bala from cashthekiosk.com is with us on the show. Jay, hi, afternoon. Season's greetings to you. Just looking at the price action in the markets. Last week on Wednesday, we had that big sell-off, but it just turned out to be a one-day wobble, not very material. And after that, Thursday, Friday, and today, markets have been consolidating, moving up with a positive bias. What's the setup looking from here on?
Yeah, thanks for the wishes, Rima, and wishes to you and all the people at CNBC-TV18. See, as long as the markets remain above the December 13th low for the Nifty and December 12th low for the Bank Nifty, I think the trend is still up. The trouble starts only if the markets were to start trading below those levels. But we are watchful for a formation of a top. It's just a watch and an alert. It's not a preemption, and you should not get negative about it. But we are just watchful, so you got to exercise a bit of caution. So that's the point here. So the setup is such that we are probably on the last stretch of the move that started from the middle of this year, and there is a possibility of a likely top. As I said, likely it's a probability. We just need market to confirm that. Until that point, assume the market is still going up.
Okay, and just for the benefit of our viewers, 13th of December, the Nifty had hit a low of 20,769. So that would be the marker on the way down.
No, absolutely. Jay, and what about other indices? I mean, what is looking, you said you used the word top. What else is looking toppish according to you?
Since the middle of this year, I've been bullish on capital goods and realty and autos, and all these indices are pending further higher highs, but all of them have lost momentum considerably. But so the watchfulness that one needs to exercise at this point of time is that if the next higher high were to get registered and the markets were to reject it, that will be a bearish sign. And we'll combine that with the breakdown of significant support levels. And the level Rima has pointed out, 27.69, that's perfect. And on the Bank Nifty, it's 26.886. So, if these support levels were to give and also combined with the rejection of the next new high, that will be bearish setup for the markets. So the vulnerabilities of the leading indices are already starting to look a little bit vulnerable and fatigued, but we don't have a reversal yet.
Jay, hi. Good afternoon. So, some more trading strategies. Well, what would the advice be? Volumes are a little thin. First of all, would you initiate anything for the next 2-3 days, or would you wait for the turn of the year? Basically, some trades perhaps that one can work with.
Yeah. So it'll be like what we had, identified in the middle of November, the all-time highs and new highs for the global indices as well as the Indian indices. That's played out as per expectation, and I think that is still continuing, and a little bit more is pending. So we'll play strong stock which haven't lost momentum. So something like Bharti, that's still the recent early December high it doesn't look like a complete move. So bullish on it against the risk level of 940, maybe even 960 is okay, but 940 is quite conservative. probably expecting somewhere about 1100 plus for Bharti. And there are a couple of negative setups. One is Oracle Financials, another one is Polycab. Both are thinly traded, but watch out for Oracle Financials against the risk level of 4,400. It's probably setting up to drop to about 3,400. Be very conscious. Both these names are thinly traded, Oracle Financials and Polycab. So be very careful if you're trying to short here.
Okay. Any shorting opportunities where you've seen a confirmed top and there is a reversal in the offing?
I think we don't have a confirmed top in most of the indices, and even these stocks that a couple of stocks that I mentioned, Oracle Financials and Polycab, they're all corrective plays, not deep reversals. They are all short-term setups. So autos, they are the key here. They're probably going to clock fresh 52-week highs, and Nifty Pharma Index, that's also at fresh 52-week highs. But all these indices that I like, they have started to lose momentum, and we'll be watchful for price rejection from those levels. Then we'll get more aggressively bearish. But until that point, we remain bullish on the market.
Jay, we've got some very interesting moves on global asset classes as well, right? I mean, the US 10-year is now trading below 4%. The dollar has slipped to just about 101.5. I mean, it's a 5-month low on the DXY as well. What do you make of these bigger trends, and how would you correlate them with what your next Nifty levels might be, the targets that you may be working with?
Yeah, it's too early to project Nifty targets, but I know where it could happen, but it's too early to talk about it. But so for the moment, we'll avoid. But the setup in the global markets, I don't know if you recall, in November when the US 10-year yields hit 488, I said I'm no longer bearish on the 10-year bonds, and the markets went to 5.02 or 502 bips, and then turned around from there. If you go and look back at my prepared notes, I have pointed out to a correction to about 390 bips, and the markets have started slightly below it. There is a significant support for the US 10-year yields at about 380 to 360 bips. So I think there is a surprise reversal for the markets, bond markets in January. So and the dollar index could clock another low, but it could be above 99, and that could also turn around and suit with the US bond.
Jay, thank you very much for joining in. Have a great new year, a happy and a prosperous 2024 too. Wishing you that. For the markets, we're ending with about a 100-point gain. The Nifty at 21,450. Markets open flat, but in the first 1 hour, markets scaled close to about 100 points. And since then, after about 10:30, it's been a very, very steady session for our market. Sensex going home with a gain of about 200 points. Mid-cap shining, mid-cap index up 300 points. The advanced decline ratio has 3 stocks gaining for 2 in the red. In terms of the sectoral movers, it's banks which have performed quite well. So the banking index is up 300 points, a little bit of an outperformance, but it's the CPSE, the PSUs, which have outshined everything else. The CPSE index is up 2%. Metals have done well with a decline in the dollar index. Pharma has a gain of more than 1%, and autos led by Hero MotoCorp too, showing you an up move of nearly 1%. Adani Green, by the way, is now up 6%. And on the losing side, Bajaj Finance and Finserv are the top losers, and Infosys, after that contract cancellation, is under pressure.
Yeah, that was a bit of a dampener right from the morning, Infosys and some of the other large cap IT names. But back to this sizzling PSU rally, look at the way stocks have closed out. Mazgaon Dock, 8%, NLC India, 12.5%. Look at some of the other names as well. Actually, I mean, if I go beyond PSUs, look at some of the private sector names in defense and shipbuilders. Very good moves on a Bharat Dynamics, 7.5% up. Cochin Shipyard is up about 5.5%. So big moves there. A couple of the chemical stocks did well. Alkyl Amines, 12%. Himadri Chemicals, 7%. So interesting moves coming in over there. By the way, Bombay Burma, 10.5% up on this stock. Not a usual name, but today it was up and about. There's a long list of PSUs, IOC, REC, NMDC, BEL, SJVN, big list of gainers. On the losing side, again, I'm only looking at mid-caps right now. Zomato, Manappuram Finance, these are some of the stocks that lost out with decent volume So perhaps worth noting. And of course, RBL Bank, I guess that was the other big headline. This card issue between Bajaj Finance and RBL Bank. RBL has taken a knock of 4.5%. Bajaj Finance and FinServ, the two noticeable losers on the Nifty today.
Absolutely. I mean, I think it's a strong close, 100 points, first trading day of the week. So 4 more days to go. Where can we be at by Friday?
First trading day of the last trading week of 2023.
I'm sure if you try more, you can complicate it a little bit more.
I actually had to think about it. First trading last day. Okay, fine. You talk about today, basically.
All right, there goes the bell. And right on cue, we're going to wrap up on closing bell from the entire team. Thank you for watching. Don't go anywhere. Markets Forward comes up next.
CNBC-TV18, embarking on a quarter century of excellence.